Welcome to the Strategy of the Week presentation for April the 19th, 2013. My name is Cathy O'Nan. I'm an instructor here with VectorVest, and I'll be providing your strategy presentation this evening. Tonight's strategy is titled Heavy Hitters. We've had feedback from our subscribers that once they've had some success trading the Surefire Success trading plans, they were having difficulty trading large positions of low-dollar stocks without moving the market. Heavy Hitters is a new search we've added to the program to help address this challenge. Let's begin with the search parameters in the Unisearch tool. From the home page within VectorVest, we'll move over to our Unisearch tab. From the directory on the left-hand side, we'll go down into our searches and find Searches Prudent, and we're looking for a search that is going to be called Heavy Hitters. Yours will be loaded into the program tonight, but I've gone ahead and created one for our use for this strategy. Before we begin, I want to establish our mindset. We aren't just going for max gain. Maximum gain is often achieved by trading small, low-dollar stocks that tend to move quickly. Here we're trying to take a more conservative approach. As we look at the search parameters, we start with $10 stocks that have a buy recommendation and at least a $3 billion market cap minimum. This keeps us into mid to large cap stocks. Next, a series of moving averages assures us the stock is operating above the golden cross, which is the 50-day moving average over the 200-day moving average, which is commonly used by the institutions. To use moving averages in Unisearch, you will need the add-on module called the Pro Trader. There is a link in the views for a special offer, or you can call our office for a 2-week free trial. Next, we'll look at the earnings performance of the company. We want to make sure that they are actually making money and making more money year over year and growing at a rate of at least 10%. We will be buying stocks traded on the major exchanges, but excluding the ETFs and market sectors. The sort that you will find in your Heavy Hitters that's downloaded for you tonight will be a different sort instead of our typical VST descending. We're going to change this sort. We have the drop down. I'm going to hit the R to take us to the first R. This sort will be sorting with RV divided by RT. This is looking for stocks with good relative value but with a lower relative timing. However, knowing that the stock has a buy recommendation, we're assured that the RT is above 1. So let's run the search and take a look at some of the graphs. We'll go over and find our graph format, and we will graph the top few stocks here. We'll notice that golden cross. We do see the moving average, the 50-day above the 200-day. Let's take a look at the next one. That's a beautiful graph. We do see a nice rising price pattern as well as rising earnings per share. Same on this one, great rise in earnings and also a good rise in price with that golden cross. These graphs look great, but let's move over into the back test to see how these actually work. The first thing we did was run the search against all of our market timing calls. The best results came from our confirmed calls, and I'll add these to the graph. You'll notice the green lights are confirmed up, the red lights are confirmed down, and notice when we are in the confirmed down, we do go to cash, thus getting these straight lines. This is the first departure from the Surefire Success system, but these stocks underperformed with an earlier entry point. So let's create a back test, and I'll step you through our settings. To see the settings for this test, I'll take you up to Edit and our account settings. Here we're starting out with that larger dollar amount. We have $1 million with $9.95 per trade, not using margin. Our market timing, again, we're using our confirmed calls. And in the automation rules for our confirmed up call, we'll be looking for that search in the folder Searches Prudent, and we'll be finding that Heavy Hitters. For our stop criteria on this base run, we're using when the stock gets a sell recommendation as our exit point. On the more settings, you'll notice on this we have 20 positions. The reason for this, having that large dollar portfolio, we want to have more positions and not be so heavily invested into any one position. We will be automatically replacing any closed positions, trying to open 20 positions immediately. The next settings we'll leave to their default setting. We'll be investing the average portfolio value, buying odd lots. We will limit our repurchases, giving us 31 days to avoid that wash sale rule. And the only change here at the bottom was we will limit our maximum average volume to 2%. Now for the automation rules, when we get a confirm down, we will go to cash. Our test period is 11/1/2007 through ending date 4/18/2013, and we gave this the name Heavy Hitters with a sell recommendation, and I'll show you those results again. Here across the top we have the results for this run. We're using confirm calls. Our start date was 11/1/2007. The reason we chose that, this was the start date of our test bed for surefire success. Our total value ending at $1,441,000, and we had a gain of 44.14% with an annualized rate of 8.08 and a max drawdown of 20.13. The drawdown of 20% is high and really something that we don't want to settle for. So let's look down at the graph. I like the strong performance in the uptrending markets, but the drawdown, especially here in the summer of 2011, after 2 years now, we're just now making up that lost ground. So we need to see how we can improve on this. Typically, to minimize drawdown, we could do several things. We could try tightening our stop criteria, stepping into the market, or just not replacing closed positions. Using these techniques, we did see some incremental improvements, but a lesson we learned from the Surefire Success portfolio really spelled the difference, and that's by hedging. So keeping in mind our new mindset for this trading plan and its more conservative approach, we chose to use those contra ETFs instead of shorting individual stocks. We simply applied the tested methodology to our trading plan with one notable exception, the number of positions. Let's make a copy and we'll populate the downward side of the trading plan. We'll go up and hit copy. Our account settings will stay the same. Our market timing stays the same. We need to make a change in the automation rules for the confirmed up. We need to change the settings tab to do not close any position when entering this situation. For the automation rules down, we'll be buying long. Our search will be the RTC Index ETFs Contras, and we can find these in the search folder, RT Combo Pairs. Our stop criteria will be a trailing stop of 10%. And under more settings, we will change our positions to 20. Changing to 20 will keep our position size consistent. It's important to note, however, that we'll never be holding 20 positions because there's only 13 index contra ETFs in the watch list that we're using in the search. We will not be replacing closed positions, so we'll remove the check mark. This will prevent us from buying back into a downward trend that typically lasts for a shorter period of time. We will try to go ahead and open all 20 positions when we're opening, but remember again, we'll never quite get to that 20 level. We will change to don't close any open position when entering this situation. We'll scroll down through our other default settings, invest average portfolio value, odd lots. We will limit our repurchases again to that 31-day so that we avoid the wash sale rule. The other setting that we will change is our maximum percentage of a stock's average volume. We will change that also to 2%. And last, we'll need to change the name of the back test, and we'll name this Heavy Hitters Index Contra ETFs. Now we'll hit finish and run. We can see the difference in the results. We went from 44% gain to 82%. Wow! The drawdown went from 20% down to 13%, and our trading activity was cut almost in half. This has an average of about 71 trades per year. This is not a full-time job. And remember, when you're looking at the performance here, this does not include any of your dividends. Although it struggled early on, it was never significantly underwater. One of the things we looked in the Surefire success was consistent year-over-year gains. That way, no matter when you jump on, because you're always hitting higher highs, your success is assured. I went 2 steps further in trying to optimize our performance, but in each case there were significant trade-offs, but we'll share these with you. The first thing I wondered was, on the short side, since I could never be fully invested, what if I cut the number of positions in half and doubled their size? Here's the results. Our gain changed from 82% to 99%. Our drawdown stayed about the same. The trade-off is now I have $100,000 positions in contra ETFs that are more volatile and often considered riskier, and this is getting away from my conservative assumptions. The next thing I tried was to not replace positions on the long side, and let's look at those. My gains moved to 102%, but our drawdown increased to 14.79%. The downside in not replacing stocks, I could be sitting on the sidelines in an extended bull run. So bottom line, I chose the 2020 run as the sweet spot. These are the backtest settings that are documented in the views. Trading large portfolios presents unique challenges. Our heavy hitter strategy is just another way to help you achieve the results you're seeking. I hope this gives you ideas in trading your own portfolio. As always, give us a call if we can answer any questions or be of assistance. Thank you for watching and have a great weekend.